The financial decisions that you make and what you spend your money on over the next 6 months can define your financial situation for the rest of your life. Two of the world's biggest banks are on the brink of collapse, and believe it or not, this might affect you more than you would expect. So the question is, are we about to repeat the 2008 Great Financial Collapse? Well, stay tuned and you'll find out. My name is Chasse, folks. I have been passionate about financial freedom basically my entire life. By 2015, I found myself financially free. And since then, I have created multiple crypto investment funds and crypto projects and have a big company called Master Ventures. And since then, guys, I have learned a tremendous amount of tools and lessons that, believe it or not, you can apply to your life as well. If you're new here, make sure that you subscribe to the channel and hit that bell notification so you get alerted every time that I make a new video, because often these are very time sensitive. All right, guys, so this video is going to be dense, really giving you the understanding of what's happening behind the scenes. At the end of the video, I'm going to tell you the best way that you can possibly prepare to deal with the financial situation ahead, whether we go into an extreme collapse or we kind of just continue to trend sideways. You're gonna wanna watch a whole video to understand what's going on, but more importantly, make sure you watch to the end to prepare for what's about to happen. You might have heard already, or you might not have, that two of the biggest banks are in really big trouble. This is Deutsche Bank and Credit Suisse. Yeah, guys, they are on the brink of a total collapse. We're talking about repeating the whole Lehman Brothers collapse. This is a really, really big deal, and it might affect you more than you would think. But that's not the only thing that's happening in the world right now. The macro economy is very fragile. Let's take a look at some of these other headlines of things that are happening around the globe. The UK pension fund almost got liquidated. Literally all of grandma's retirement money virtually gone. China, if you haven't heard, had a massive housing crisis, and they are on the verge of another further slump down. The stock markets have had their worst performing year in the past 50 years. Okay, hold on a minute, guys. Now, you might be asking yourself, Kyle, is this just typical bear market FUD? Or could you be onto something, and could this indicate that the market heads down to a 12K Bitcoin? Well, as it turns out, these aggressive interest rate hikes from the Fed are not only affecting you and I, but they're also affecting the world's largest banks. Worst part is, the banks are supposed to be the ones who are the most financially savvy. They're the ones who are supposed to have their head on their shoulders and understand what's going on so they can adapt. They're supposed to be responsible. But I guess after 2008, if you're a bank, you're asking yourself, why should I be responsible? The government's always going to bail me out. And I guess they've been observant and took advantage of the government's liberal bailout policy and decided to over leverage themselves yet again to where, yep, they're gonna have their hands out asking for another bailout. If you guys haven't seen the movie The Big Short yet, I suggest that you do. It's phenomenal. And that movie couldn't hit closer to home with the way I'm feeling right now. Like, what the hell is going on? Why haven't we capitulated even further yet? There seems to be no way out right now, where the Fed is kind of screwed either way you look at it, whether you resume quantitative easing, which will just further encourage inflation. We also see the dollar increasing like crazy, especially compared to any other national currencies, because the United States is selling en masse the US oil reserves, and which everyone has to buy US dollars in order to buy those oil reserves. So this is what's artificially driving up the US dollar. The whole thing is messed up, right? The whole thing is messed up. So like the movie The Big Short, there's a lot of us sitting around scratching our head and wondering what the hell is going on right now.
What the hell is going on?
Speaking of meltdowns and over leveraged positions, let's just take a second to remember the great crypto collapse that would be compared to the Lehman Brothers collapse, so the great financial crisis of 2008, which was Luna, 3AC, Celsius, Voyager, and some of the other smaller guys that got hit by this cascading liquidations, which drove the price of Bitcoin in the crypto markets down to about a third of the original market cap. So let's put this in perspective for a second, because I don't know if we've really wrapped our head around the gravity of the situation ahead of us. 3AC was managing about $10 billion. Lehman Brothers had about $600 billion under management when they collapsed. But now we've got Deutsche Bank and Credit Suisse that combined have over $2 trillion under management. So guys, if you thought the Luna fiasco and the 2008 Lehman Brothers collapse were bad, and this could be exponentially worse than those combined. So as you can see in this tweet from James Melville, the banks right now are collapsing faster than the 2008 crisis with Lehman Brothers. This is extremely significant for the points that we already mentioned. $2 trillion under management is significantly more than $600 billion. So the quote from the CEO says, Credit Suisse is at a critical moment. Bank prepares for its latest overhaul, whatever that means. I'm sure they're just hoping that everything turns bullish again and the central banks start printing again. These banks are obviously too big to fail. I'm sure that's the mentality they're taking. There's just no way we could possibly, as in the human species, couldn't let $2 trillion of value just evaporate. This is real people's money, right? And like, if this bank goes down, there's very small chance that anyone's getting their funds back. So let me explain to you exactly what is going on and why this could be catastrophic, not only for companies, but also for these banks. So essentially what happens is these companies all around the world who bank with Credit Suisse and Deutsche Bank and other banks, what they do is they earn profits, right? And they have this profit sitting on their balance sheet. Now, what are you gonna do with it? We all know that having cash laying around, especially in today's world where interest rates are probably 10 to 20%, you don't really want to leave your cash lying around not generating any value. So they're looking for very, very safe types of investment opportunities that can lend some sort of yield or generate some sort of yield. Now, the safest investment tools that are offered by these banks are bonds, right? So what happens is the companies will buy these bonds and get a 2, 3, 4%, but probably more like 2 or 3% yield generation on the bonds that they purchased. In addition, what they'll do is now they'll start leveraging the bonds that they have as collateral. So the same way that people were putting up their crypto in Celsius, for example, as collateral and taking loans against it, the same kind of thing is happening right now in the traditional world. Companies are making profit, they're buying bonds, they're using the bonds as collateral, they're taking loans against that, and so on and so forth. Now, what happens is when the Fed starts increasing the federal rates, aka the interest rates are climbing, this by default reduces the value of those bonds. Now, if the bond value decreases, that means the value of the collateral also decreases. Now, when this happens too much, in conjunction with the declining stock prices, this could lead to a margin call. The same thing that happens when you get liquidated from a leverage exchange trade, or for example, a crypto-backed loan by someone like Celsius. So this is also happening right now in the traditional world at a big extreme rate. So then the companies could default on their loans, and therefore the banks don't get the money back they loan out to everybody, putting them highly exposed and essentially not able to get all their money back that they lent out. So now you have a position where the banks kind of have one or two options. They either ask for a bailout because they lost all the money they lent out, or they collapse. Now, as we said earlier, if we look at history doesn't repeat, but it rhymes. More than likely, a bailout would be called on here. So guys, what does this all mean? I mean, obviously we're in a really weird spot right now. Whether you're in crypto, real estate, equities, it all seems like the bubble is collapsing. Now, have we bottomed or have we not? That is a question to be seen. Normally we see a capitulation like in 2008, where the entire year of 2008 was just like a huge falling knife. But if you could have bought the bottom there, it would have been incredible, right? But we can never buy the bottom. It's impossible. Don't even try to do it. And none of this is financial advice, by the way. I'm just trying to give you some education on what's going on and how I'm preparing to deal with this really uncertain road ahead. So what does this all mean for you if you're watching this, and how to proceed forward? The fact is that we just don't know what's going to happen in the markets ahead. We don't know if we're going to continue sideways, if we're going to see things get a lot worse. And I'm in the opinion that things should get a lot worse, and I am preparing for that. I think what is certain is we're probably not going to see a huge bull market anytime soon. We might see a relief rally. So I've been hearing things that potentially we might see something happen, which is kind of unprecedented, but it's simultaneous hikes of interest rates, meaning continue to increase the interest rates while simultaneously printing money. Now, if this happens, it will be good for the equities markets and crypto, and we could see some sort of temporary relief rally where things start to feel really bullish. Now, I would caution you that if that happens, do not fall for the mistake of thinking that we're in a bull market and going all in. If this happens for me personally, what I'll be doing is I will be selling and taking profits into any type of pumps until we have more clarity in the markets ahead. Right now, to be clear, the only thing that we don't have is clarity. We have no idea what's going to happen in the markets ahead. So let's not pretend that we do and prepare for that. In my opinion, the best thing that anyone could do, and this is what I am doing, is continuing to earn revenue. Find out ways that you can earn more money than you're earning now, if possible. Stop spending money on stupid stuff. No more lattes, no more whatever. This is a golden opportunity for you right now. So what do? You dollar cost average in. And if you're not familiar with that, what that just means is you take a systematic approach to entering into the market. If we do get some really big pumps, let's say Bitcoin goes back to $25,000, $30,000, for example. For me personally, I'm going to be taking some of my altcoins and maybe even some Bitcoin that I have and exiting the market temporarily to find out, because after a relief rally, like we see oftentimes in bull markets, things come crashing down. If we get these relief rallies, taking profits, putting that money on the sideline, waiting for some capitulation to happen, and buying back in at really good lows. Now, I have my price points of where I want to buy back in at. For me, it's like Bitcoin around 17,000, and I do weighted buy-ins as it gets lower and lower and lower. So let's say that I've got $10,000 that I want to put in Bitcoin over the next period of time. I can either, if you don't want to deal with the stress of trying to time the market, dollar cost averaging is the best way to do it possible. But if you're trying to be a little bit more strategic, a weighted buy-in is also a good methodology. So let's say I've got $10,000 to buy into Bitcoin, and I think there's going to be capitulation that happens, meaning a significant downturn ahead, meaning that it drops from, let's say, $25,000 all the way down to $15,000, $16,000, $17,000 in the period of a day or two or three. What I would do is I would take, let's say, out of the $10,000, $1,000, and maybe buy $1,000 worth of Bitcoin at $18,000. And then it gets to $17,000, and now maybe I buy $2,000 worth of Bitcoin. And then it gets to $16,000, and maybe now I buy $3,000 worth of Bitcoin. And if it gets to $15,000, maybe I buy 4,000, whatever's left, right? And maybe I say, okay, well, I'm super stoked if I got to buy any Bitcoin at $15,000, and I'm putting heavier buy orders in, the lower the price gets. This is a really interesting time for anyone who's in crypto, as we have never seen a crypto bear market coincide with a global financial collapse, or even just a bear market in the stock industries or housing or whatever. This kind of everything bubble we've been exposed to. So what does this mean? This means that what we do know is that crypto is more adopted now than ever. We do know that the price of Bitcoin and Ethereum and other blue chip cryptos are probably undervalued at this point, even today. And we do know that it's inevitable that crypto becomes more and more adopted. If you just look at the trend, look at the pattern, how many wallets, how many new people are coming in the space, it's still growing even till today. With that being said, I don't know that we'll ever have another opportunity where these legacy markets and the crypto market coincide in a bear market. That means we're more than likely seeing severely undervalued crypto assets. If you would have asked anyone a year ago, would Bitcoin ever go to $20,000 again? 99% of people would have said no. It is my impression, my guess, is that we will never see Bitcoin again at these prices. So Bitcoin will go up in value, and in my belief, we will see $1 million Bitcoin one day. I also believe that we'll probably see a $5 or $10 million Bitcoin in the next 10 to 15 years. So whether you buy it at $18,000, $22,000, $15,000, it doesn't make a whole lot of difference when we're talking about $1 million Bitcoin in 5 or so years from now. That is what I'm gonna do to prepare ahead. If you've been watching this channel for a while, it's not any different than the strategies we've been talking about, right? We've been talking about the bear markets. We've been talking about the prices coming back down again. We've been talking about dollar cost averaging. We've been talking about all this stuff. This shouldn't be news to anyone who's been following my channel for a while. But if you haven't been, welcome, subscribe, tap the bell for all the notifications, like the video if you could, and I'll catch you guys in the next one.